Good evening. Welcome to this meeting of the Audit Committee. For the benefit of those watching our YouTube channel, members of the committee are present in the chamber and these members will be voting on proposals this evening. Other members of the council are also in attendance or participating via MS Teams and can take part in any discussions, ask questions but cannot vote. Your attention is drawn to agenda item 1, which sets out the guidance on how meetings will be conducted, including the ground rules. Before we start with the formal business, we can confirm attendance of voting members by doing a roll call.
Thank you. Councillor Cannon.
Here.
Councillor Lark.
Here.
Councillor Bishop.
Here.
Councillor Clerkey.
Here.
Councillor Hood.
Here.
Councillor Parry.
Here.
And Councillor Rhodes.
Present.
Thank you.
Thank you. There's officers present in the chamber, and can they introduce themselves?
Good evening, everybody. My name is Paul Worden. I'm the Head of Finance and Section 151 Officer.
Good evening, everyone. John O'Reilly, Financial Services Manager.
Good evening, Amanda Riley, Principal Accountant.
Good evening, Karen Herbert, Deputy Audit Manager, Audit Lead.
Lee Jones, Kent County Council Internal Audit Manager.
Thank you. Are there any officers present or anybody online? Thank you.
Not an officer, Sophia Brown, Key Audit Partner with Grant Thornton, your external auditors.
Thank you. Right, on to the agenda, and there's no apologies and no need for substitutes. Any declarations of interest?
Yeah, so a lot of the admin and that, keeping abreast of changes, especially in the shooting world, there's always something new, something changing.
No declarations of interest? Great, okay. The minutes of the meeting held on 29th of September 2025. Can we confirm those as a correct record? Thank you. Sign those now. So on to item 6, and that's the Treasury Management Performance Update and Treasury Management and Annual Investment Strategy 2026-2027. And I'll be asking Donna Riley to open that. Thank you.
Thank you, Chair. Good evening, everyone. Tonight I'm going to take the agenda slightly differently to what I would normally do. So I'm going to take the report as read, but I will tease out some figures for you. Then we'll look at the property funds and then the strategy, if that's okay with everyone. So our current position, so at the end of November, we had £70.5 million in investments. 63.6 of these were held under 12 months. So the instruments that we actually used was certificates of deposits. So this is something that can be traded on a secondary market. So if we needed the money, we could actually pull it back. Fixed deposits, and whilst these are held to term, we have a laddered approach. So we are having investments maturing on a regular basis, which then we can review and see if we need to draw back for cash flow purposes, or actually we can reinvest for a little bit longer. Then we have the notice accounts, which cover 31, 35 and 95 days. We don't put it beyond 95 days because we would just put it into fixed assets. Of that, the interest that we've earned this year so far is 1.99 million. We're just shy of £2 million on our investments. It's a positive variance against our budget, our original budget of £392,000. So we have revised the budget upwards to account for the additional monies that we have. As I've said previously, the bank rate is predominantly the driver behind this. It's not coming down as quickly as we had anticipated, and the markets are still very volatile. So whilst we expected to have at least 2 rate cuts this year, the markets are pulling back. We were expecting one next month. We're not likely to get that. We are looking around the summertime, so June, July time. But that's at the moment. That could be sort of, taken from us. It's a good thing for us from an investment point of view. But we are only now anticipating one change downwards on the interest rate. So we're expecting it to go possibly to 350 by mid-year, and then we're not expecting any further cuts. Then I want to look at the overall performance of the portfolio, and this brings in the property funds. So Councillor Clokey did actually reach out and ask for some information, which he kindly allowed to be distributed to members. So I hope everybody that's actually given people some insight to the information on the property funds. I think at this point, it's very hard to look at things without hindsight at this moment in time. So if we look at the assurance, so retrospective insurance, really, assurance, if we had done what we did, what would have been the outcome? Could we have actually done something different? And if I take it back to 2017 and the decisions taken, so when you're actually looking to put money out and diversify our funds, at that point there were other things on the table. Now, the things that were on the table was things like buying into hotels or shopping centres, and that was seen to be quite a high risk and certainly outside the scope of the appetite that this council has. However, property funds did actually fall within that risk, and therefore that's why it was pursued. Do we look at the situations now and think, should we have done it, shouldn't we have done it? Well, we can go back and think, we have made a considerable amount of money on the property funds overall. Yes, we haven't had the outcome from Lothbury or Hermes, and that is very, very unfortunate for us. But if I can take you to look at the other property fund, the local authority property fund, and see how that's actually performed. So they were able to disinvest their funds, in the funds. They moved over to student accommodation. They've been able to enter into a partnership with Jupiter Investment Group. That has actually been approved now by the FCA, and that was approved in December, just before Christmas, and they expect that to go through by the end of this month. So in a week or so, it should all be done. And that's allowed them to strengthen long-term strategic resilience. It gives them access to a broader investment resource pool. So they're doing everything that they can actually do to look at the performance. So let's look at the £2 million that we invested with them. Now, the 2 million allowed us 1.84 million as a buy-in for the share. You don't invest 2 million and get 2 million, you get slightly less. The NAV price, that's the net asset value on this fund currently, is 1.76 million. So it's actually £80,000 under the buy-in. I'm not looking at the actual, what we put in, but the actual buy-in. But it has actually generated £637,000 worth of dividends. And that gives us an overall net position on that fund of 394,000 from the total investment. So that is a success. So I think we have to look at the successes as well as the impact that Lothbury is having. Now, I've pulled back the figures and I've looked at the movement between May and December on this fund, and it's relatively stable. The actual movement in the NAV price is £4,000. So it feels like it's plateaued. Now, historic data will not provide the performance going forward, but it gives you a sense of perhaps stability in this fund, and that is possibly to do with the fact that they've managed to secure the partnership. They're looking forward, they've been able to disinvest. So at the time of actually investing, could we have foreseen how the markets have gone, how we now go into offices, you know, could we have, and it's not reasonable to think that we could have done that. So I think looking at the positives and looking at the negatives, I think the positives come out quite well. But overall, for the performance of the portfolio, I think that we need to look at it not in silo, not as Lothbury or Hermes or the local authority pension fund, but we need to consider it as a whole. And so looking at the portfolio, I did the figures just before I came down. From 2017-18 to date, we have generated £12.7 million from investments. That's a lot. That's actually a strategy that's worked for us. The Lothbury Property Fund and the Hermes, the impact of that is 5% of this value. So I'd like members to focus on that. I'm not saying discount the Lothbury or the Hermes, but I'm saying look at the portfolio as a whole, and look at it retrospective assurance. Have we done the right thing with the information that we had at that time? I'd quite like to pause here and see if anybody has any questions or any comments before I go on to the TMSS, if that's okay.
That's fine. James.
Donna, as usual, thank you very much. Very full and thorough explanation. Hindsight is a wonderful thing, isn't it? And we're not gifted with crystal balls or hindsight. And the markets are in absolute turmoil. For those of you that know, I just mentioned to Donna before, I watched the news, and apparently the gold price has gone the highest it's ever been, and that's due to Greenland. And they're things out of dear little TMBC's control. And I think that the finance team and the investment team have done a fantastic job making us some very good returns, and we must now look forwards and learn from what we've done that might be, with benefit of hindsight, not the right move, certainly not wrong, but it was an approach and you did it and we all backed it at the time. But now let's move forward, and I think that we're in an unenviable position with investments in relation to many other local authorities around us. So, well done you.
Thanks, James. Certainly agree with that. Mark.
Thank you very much, Chairman. Yeah. Thank you very much for the report so far. Thank you for the letter. Thank you, James, for suggesting that we share that, because it was very informative. I think when I first joined the council and heard about these property funds, I wasn't kind of enamoured with them. But then I had it explained to me at length about the spreading of the risk. And for the vast majority of the time that we had those products, they were paying a dividend which was far greater than our investments elsewhere. And Neil always said that we weren't going to get rid of those because they're part of a basket of investment. And he had never envisaged getting rid of them, and I had never envisaged seeing the end of them either. And it hasn't been our choice to get rid of them. So as I understand it, the reason that we are unable to keep hold of the last one, because we can't transfer into the new product. But I wouldn't, and it's worked. I think it's worked out. We've got less than we invested, but then it's a long-term investment, and we bought it for dividends rather than to see the value of it increasing. And we need the money elsewhere in the council's future, maybe. So it's not altogether a bad thing. It looks terrible, doesn't it, when you see £600,000 loss? It looks terrible, but then when you balance it with the income we've had and the fact that it was part of a long-term strategy, the outcome's been taken out of our hands. So thank you very much for explaining it. I envisage we're not going to be looking at any others, any replacement property funds though. But thank you.
Thank you. Anyone else? Oh, James, sorry. Yep.
My thanks for all the detailed answers to the questions I've been asking. It's really helpful. A lot of why I'm asking is because I was not around when the decisions were made, so I'm sort of trying to understand the situation. So that's really useful. I suppose my concern is, I think firstly, if we were going to invest in property, then property funds do make a lot more sense than buying a shopping centre, etc. For all the reasons you stated. I mean, my question broadly, our long-term investment strategy seemed to be entirely property. I mean, we've got the multi-asset funds as well in terms of medium term. So it was sort of like, how did we decide that mix of asset types? And sort of the other thing, and it was more sort of like, did we consider it at the time and consider it an acceptable risk, or was it something that we didn't quite appreciate? Was just the operational difficulty. If a property fund gets into trouble, as we've seen, it takes forever to unwind because it's big, chunky with underlying assets, and it's we're still waiting for money back. So it was, you know, to what extent do we understand and risk accept if a fund goes down? And this is, you know, we had property funds ran into problems back in the global financial crisis and since. So I've in my day job at the time, the back end admin from property funds going a bit wonky was the bane of my existence. So did we consider and accept that risk, or was that something that we sort of didn't see coming?
I was around at the time when we did the investments, and yes, the risk was considered, but the risk was considered as a lower alternative to investing in shopping centre as such. And that was the main reason why we went with it, because it was a more diversified portfolio on that basis. And that's all I can really say about that matter. Yeah, but I'm sure Donna can add something else, but I don't want to leave Donna on the spot because she wasn't here at the time. So I thought, as the only officer who was here at the time, I think I need to put my head above the parapet on that one. So, but Donna.
Thank you. I totally understand where you're coming from on that one. The funds, as Councillor Hood actually mentioned, were expected to be held in perpetuity. So it was never meant to be cashed in. So and this actually responds to the other question that you raised. If we ever pulled out, we would be pulling out when the capital was actually in growth, the growth period. But when we were actually looking to disinvest, we would have had the capital plan set out, so we would know at what point we needed to invest. Our capital plan actually covers several years, so we would know where our peaks and troughs are and where we actually needed that money. So whilst yes, they're longer to pull out from. Generally, if you're disinvesting from a fund, depending on when you put the disinvestment request in, it can take between 3 and 6 months. In this circumstance, the fund closed and all the assets have had to be sold. So it has taken a considerable amount of time, which hopefully will be finished in May. Hopefully that will help.
That's really useful. Thanks.
Thank you. Donna, I suppose move on to the TMAIS 26-27.
Thank you, Chair. Just very briefly, I wanted to go through the TMSS with you. So as you can see, it's had a bit of an overhaul in a very positive way, I hope. But there are a couple of things that I've actually added into it. So I just wanted to highlight that. And if members have a read through it and then have any questions, by all means, please come back to me. So I've added in section 5, which is the MRP. That's the minimum revenue provision, and that's linked to CFR. So that really, it looks at if we are borrowing, we have to make a provision in order to sort of get that borrowing down. I have made a change in 6A, so that changes for the authorisation limit for external debt. Sorry. the increase from next year, we've increased that to 13 million. That's to support any borrowing requirements should it be needed. And as I say, that's kind of sort of, we've made a little bit of a change there. Section 7, 8 and 9, that all covers our borrowing strategy, the borrowing in advance of need and external borrowing sources. So there's just a few things covering there. It is looking at borrowing. We are not anticipating at this moment in time, but we're setting it up just in case we have to do that. And then at the end of the document, I've actually included a glossary with explanations of some terminologies for members to sort of digest. So hopefully that has all been very clear. And hopefully once you've had a time to read it and digest it, that if you have any questions, please come back to me. But I am happy to take any questions on it now.
Mark.
Thank you, Chair. Is it possible to talk about the property risk register, which is on page 71? Yep, super. Yeah, it seems that the council's attitude to actually by getting involved in property has been reticent in the extreme. The table, the risk register table, with all that, with I think all the outcomes say it's extremely risky, and certainly with some of those things it is extremely risky. You've already told us about the number of councils that went out there and bought like lots of shopping centres and all this kind of thing, and they've got into all sorts of trouble. But it does strike me that we have been overly cautious as a council. We haven't looked at things like addressing the temporary accommodation demands that we've had, and that seems to be something that we have now, where don't get involved in actually buying properties. We only get involved in leasing properties, and I'm not sure I understand that reticence to actually own things, to take a long-term position on things like that, when we all know how crucial it is to get ahead of the game and tackle temporary accommodation costs, because it can break councils. Not this one, but and ones like some of the ones on the. But can I just have some explanation or just a comment on that?
You partly hit the nail on the head. If you want to look, do I say 90 miles east west, and you go to a place like Woking, who is so heavily invested in property and it's not come out from their favour. We are looking to invest in council-owned temporary accommodation. We have properties within the borough already. We're looking to build some more, and yes, you are right, we are leasing some at the moment. Part of the worry is that if we have too much and we haven't got the demand, we've got properties sitting empty. I was here last week at Overview and Scrutiny Committee, and there was a major challenge made about barriers to void properties. And we don't want to have void properties, but we also want to make sure we've got enough at any particular time. Now, just before Christmas, there was a paper produced about the proposed lease of another property in Tunbridge that we're looking at. That will give us, I think, based on the 110, which is our current target figure that we use for purposes of estimate, that will give us 66% of our actual provision will be in-house based. Whilst it would be great to have 100%, that number fluctuates, and it can fluctuate quite different. And similarly, the type of property needed can fluctuate. To try to meet all needs at any particular time is very, very difficult. And the idea is that we're looking at these properties specifically for that period of time. 10 years is a long time. Let's be very honest, the medium-term plan is 10 years on. And we are looking at whether or not we do need to have those properties in the longer term, but it will depend on the demand for service.
thank you for allowing me to come back. I absolutely understand and support the fact that we're building our capacity in terms of temporary accommodation. Elsewhere in the paper, at 6.1, where it talks about non-treasury management practice. At 6.1, it talks about some officers within the wider organisation needing to have requisite skills to operate in the property market effectively. When you look at our recent history buying and selling, well, we don't buy properties, disposing of properties, we've failed to get the amount of money which we could have done. We missed out by £1 million on one of them. I know we can't. We're talking about having 20/20 vision and the benefit of hindsight. It does seem that we could have taken a different position earlier on temporary accommodation, just to get that. My question is, are we envisaging a time where we're going to be part of a unitary council, and a lot of the councils around us do things differently, and then we'll almost not inherit, but we'll benefit from their expertise on this? Because I know we're not going to be running around buying anything other than constructing a large building out of the borough. It just seems that the paper itself points to the fact that we don't seem to have assembled the skill set in the organisation with regard to this, and I assume we're not going to be doing that either. So it's kind of weird to see that we've got an issue that's been identified, but I'm guessing we're not going to tackle it either.
If I can answer that, the matter of the capacity and skills and everything, I would have to refer you to the Central Services Director for that, because that's under his remit. Just going back to homelessness, prior to COVID, we had 49 clients, families, individuals placed in. That went up to 150 last year, 2 years ago. We could not have foreseen that is the way it was. I think we've probably got to the point now, and this is my own belief, and don't quote me on this at all, I think we've got to the point now where it's starting to level off, because the landlords who were speculating on the property market and the interest rates are now have been bitten by the increase in rates, and they've stopped. The people that are going to sell have sold. The market is changing. Coming back to the issue about what we're planning to do in the future, I can't answer that question for you again. Yes, our neighbouring boroughs have done things slightly differently. Some boroughs have gone up and set up housing corporations, others haven't. And I can't really comment about what the process is going to be with the run up to or even after local government reorganisation.
Thank you. I've just got one point which might help members clarify. Just on 6.6, the borrowing limit. Is the borrowing limit the authorised limit the same as the statutory limit? What's the kind of, how's that work interconnect as such? Because you're talking about possibly we could increase it if full council decide to do so. So can you just explain how that works? Thank you.
Certainly. The borrowing limit is what we're actually prepared to borrow externally, and that it's affordable for us. That's how we type in. The statutory limit, there is none. It's more about sort of looking at what we can afford and actually assessing what we are able to borrow and actually pay back comfortably without putting undue stress on council tax, business rates, etc.
Any other questions at all? Oh, James.
Thanks. I just wanted to weigh in on the point Mark was making about things we own directly. I think probably our attitude to the council should be owning things directly on a purely commercial, we'd like a return from it basis. Probably not an area we should be in. Go for appropriate investment products, etc. I think the area where we should consider it is not can we get better cost or better returns on it purely, but also does owning it directly allow us to provide a better service? And I think that's the point we need to be focusing on as part of deciding whether or not we do things in-house or sort of go to the market.
Thank you. Any further questions for anyone? No? Okay, so we can move to the recommendations at 3.1, page 21 of the agenda pack, and recommend to that Cabinet's 1, note the Treasury management position as at the 30th of November 2025, and 2, adopts the Treasury management and annual investment strategy for 2026-2027 as set out in Annex 5. So I'll move that. Can I have a seconder, please? Yeah, Mark Rose. Thank you. Is that agreed? Okay, thank you. Thank you. So on to item 7, risk management, and over to Paul.
Thank you, Chairman, and good evening, members. This is our standard quarterly report that you would receive on the strategic risk register and the operational risks discussed by services at their own service management teams. You may remember that in September 25, members agreed a new format and a new 5x5 matrix for risk management, which is now being adopted by this register and the operational risk register throughout the council. Members will now receive reports for those risks that remain red, i.e. high risk, after the council has put mitigation in place. There will be a large number of red risks on there, but we're reporting to you those items that are of a bigger risk after mitigation has been put in place. So previously, the previous iteration gave 3 red risks, being the achievement of savings strategy, savings transformation strategy, the failure to agree a local plan, and the managed exit from Agile. Following the review of the new risk register and discussing it at management team, there are now 3 risks on the risk register, but they're slightly different. The first one is the failure to adapt a local plan. The second is the recruitment and retention of staff. And the third one is local government reorganisation in Kent. Because downgrading of, downgrade might be the wrong word to use, but the downgrading of both the savings and transformation strategy is basically down to the fact that we had a £600,000 savings target for this financial year. That has been achieved and is incorporated within the revenue estimates that were considered by our review and scrutiny last week. The Agile project, I'm happy to say, is drawing to a close. The transfer of the data should be taking, the remaining data should have been completed, and we are turning off Agile this week. So there will be celebrations in planning and from the rest of the services who can now get our IT service back so we can actually do some work. The 2 new risks are partly linked, I have to say. The recruitment and retention of specialists and qualified staff remains a concern. We are seeing a large number of vacancies with the organisation of qualified staff to obtain. I can give an example. Donna has recently been promoted. We interviewed for her replacement, and we have struggled to find somebody who's suitably qualified to fill Donna's shoes. Engineering is another area, legal, property. All these areas are struggling to be obtained. But we are concerned that when staff leave, we may struggle to actually recruit into their post. The other one concerns local government organisation in Kent. My sins, you may know this, I went through this in 97, 98. I was a very young qualified accountant then, with a lot more energy than I have now, and being spread between working at your existing authority whilst doing work on local government organisation does put a strain on any organisation. To give an example, I was then in a team of accountancy section of 13 staff. Oh, the bliss to have 13 staff. 3 of us were seconded off to work on the local government reorganisation implementation team. Okay, we could keep things going. I have 7 members in the accountancy team now. If I was to take 3 out, we can't get the budget set, we can't do budgetary control, we can't do the accounts. So we've got to look at ways that we can backfill those posts, and reports are forthcoming. Once the announcement's been made, we'll be looking on those a little bit more in earnest. Moving on. Now I've got some good news. We're taking some risks off the strategic risk register. We're taking the decision to move the 2 risks that were on there previously, which were the key performance indicators and procurement. Both of these were placed on the risk register as a result of the value for money report back in 23/4. Yes, 2 years ago, by our external auditors under the value for money review. This year's report, which was issued in September last year, said that we'd made satisfactory progress and they felt that we were okay. We've taken the decision that on the next iteration you get, those 2 will come off. 2 less risks to worry about. Right. Moving on to service risks. There are 2 risks that are highlighted in that Annex 2, that show that we're looking to remove those off. One is the risk of loss of key personnel, which was from financial services. It will be 6 months on Wednesday since Sharon's retirement. So I've been in post for 6 months. I think I'm nearly there, but it probably will take a little bit longer for me to get through. On top of that, I had Donna appointed as my deputy, which means we've actually got that key personnel in place for that. The second item that will be removed is fair funding. Now, those of you who were over in scrutiny last week will heard me going on about fair funding and how it's been come out and how we're feeding it all through into the budget. It was announced just before Christmas, as I said, a lovely Christmas present for us accountants, and will be fed through to the estimates and will be coming back to Cabinet in the next few weeks. I would ask the committee to consider the recommendations at section 3, and I'm happy to take any questions that you might have. Thank you.
Ethan.
Thanks, Chair. It was just with regards to this, the recruitment and retention one that is on the register. I noticed that one of the actions required to reduce the score further talks about meaningful annual pay awards to ensure the council's competitiveness as an employer, blah, blah, blah. Now, I was obviously part of the General Purposes Committee last week, and I'm pleased that we did a 4% pay rise, but I know that I think we had a very good speech from the union reps really wanting 4.5, which quite a lot of us were in favour of, but sadly didn't get through. I wonder, especially in view of this comment and it being on the risk register, has there been any feedback from the staff? Was there much disappointment about us not being able to secure them that extra 0.5%, and whether you think it's made any difference?
I have to admit, I haven't heard anything back from the staff saying, oh, that's a bit low. As director as head of finance, I'm bound to say that I need to keep everything within the realms of the financial envelope. 4% is as far as I think we can go at the moment. It is a matter of trying to get us up to a level with our neighbouring boroughs as well. In particular, I am very much aware that our neighbouring boroughs are considering slightly lower pay rises than we are considering at the moment. So that puts, I think, that the proposed increase that's going forward to council, I think, will put us more in an even keel, which is great.
Thank you. Mark Rhodes.
Chairman, thank you. As chairman of GP, I can't let that comment go. I will remind Councillor Parry that the year before they reduced the wage increase from 3% to 2.9%, and at last week's GP, no one asked for 4.5%. In fact, when it came to the vote, the opposition didn't vote, they didn't vote against it, and then they messed about whether they should abstain. Thank you, Chairman.
Thank you. Any further questions? Mark.
Yeah, I don't think it's about scoring points. I think it's about stating the facts. It clearly says in the risk register that there's a consequence if you don't give people a competitive pay increase. I think those 3 red panels on page 83 are 81. Look, really, they really jump out of the page. They look ominous. But of course, really and truly, they're kind of inflicted on us. They're not of our creation. They're inflicted on us by the government's obsession about unrealistic housing targets and imposing LGR on us. And it is difficult, isn't it? When you can see what's happening around us, and you can see the municipal world where there's loads of, you've got new authorities being created in Surrey. I'm sorry for the uncertainty that seems to be increasing, because LGR, as far as Kent, there's no real timeline, is there? We're not on the priority programme. We're kind of in limbo. So I'm sorry for officers that it seems to be like that. It makes it so important that we make sure that our officers know that they are valued. On page 83, it talks about the prevent risk, and I think that is obviously there's so many red risks here. It's unreal. Obviously, building cohesive communities in an environment around us where there's so much division in the world isn't easy. I'm a little unclear about where it talks about the mitigation, where how we got the skills, where we all know that we should be building communities in our towns, so that everybody's got a shared sense of belonging. But where are the levers for us to make a big difference with that one, to get any mitigation for that one? And then on 13, the carbon neutral target. So overview and scrutiny, we had a meeting, we spoke about the upgrades to the swimming pools, and the fact we're having to replace them with we're replacing gas boilers with other gas boilers. And it does seem that we are moving away from our target of 2030 for carbon neutral with that one. And again, this is out of our control, because the funding that was available to us is no longer available to us. It's just so frustrating when you look at these panels and you try to work a way out of the position that we're in. It's difficult to see how we're going to be turning those orange at any time soon.
Thank you. Is there anything in there you'd like to answer, Paul?
In respect to the safeguarding and prevent, the risks are more around the impact of a missed safeguarding issue that we haven't picked up. We have robust protocols in place. We have a safeguarding officer employed. We have links with our safeguarding partners to ensure that's the case. I can't answer how to deal with the cohesive society. That's way beyond my remit. So I would leave that one to somebody else to discuss. As for the carbon neutrality issue, I explained last week, the biggest issue has been is the cost for us. It's a humongous amount of cost for us to put in air source pumps or ground source pumps to actually heat the pool. That at this particular time we do not have the funds available for. So yes, I can say that, but as for the carbon neutrality, that will be something I would say you probably have to take up with the cabinet member for climate change.
Thanks, Paul. Anything else, Councillor? Nothing further. Okay. Any other questions? No. Thank you very much. Okay, so let's move to the recommendation. That is to note the updates to the strategic risk register since the last iteration, with particular emphasis on those risks categorised as red, as shown in Annexes 1 and 1A, and note the service risks identified in Annex 2. I'd like to propose that. Can I have a seconder, please? Yes, James Locke. Okay. Is that agreed? Thank you very much. Item 8, as a matter of decision under delegated powers on accounting policies, and I think Amanda Raleigh is going to take that. Thank you. Thanks, Amanda.
Thank you, Chair. Good evening, everybody. This report sets out the Council's proposed accounting policies to be used in the preparation of the 25-26 accounts. These accounting policies have been included at Annex 1 on page 93 of the agenda pack. Highlighted in the report are amendments that the Council were required to introduce following changes to the SIPFA code in relation to the frequency of asset valuations and the use of indices in intervening years. The changes are not expected to have a material impact to the Council's accounts. However, work is continuing to ensure the Council is complying with all aspects of the code. Other than this, the policies remain largely unchanged from previous years, and members are being asked to consider and endorse the accounting policies subject to any required amendments. I'm happy to take any questions. Thank you.
Tim Bishop.
Just a straightforward question. Is this going to give you more work against what you've done in the previous years, or can you cope?
We can cope, but yeah, there's likely to be more work as always.
Thank you. Anyone else? No. Okay, so let's move straight to the recommendation. Sorry, let's, no, we can just take it as a general affirmation vote, as no officer said. So can we just take that as an affirmation? Thank you. Thank you. Agreed. Thank you. Item 9, internal audit and counter fraud, and that is Karen.
Thank you, Chair, and good evening. The internal audit report for this committee is a progress report which summarises work completed by both the internal audit and counter fraud teams between September and December 2025. I will introduce the internal audit section and then take any questions before handing over to Kevin Hollyoake for the counter fraud section. Starting with audit completion, there have been 3 audits completed to final report stage in the period. The summaries of these audits are included at Appendix A, which is page 122 in your packs. I will take you through them briefly now. TM06, which was the Gibson accommodation project, internal audits were engaged on a consultancy basis to provide embedded assurance and advice on pre-agreed aspects of project management for the delivery stage of the Gibson accommodation project. The summary outlines our findings up to December 2025. 5 areas for development have been raised, however, these are all considered to be low risk. Advisory work does not generate an audit opinion or prospects for improvement. However, the findings from this type of engagement will still contribute towards our year-end opinion. We are expecting to provide a further management letter update later in 2026 as the project continues to develop through the spring and summer. The second audit was appraisal processes. That received an adequate assurance rating and good prospects for improvement, 3 medium risk issues and 1 low risk. And then finally, TM03 IT asset management, which again received adequate assurance with good prospects for improvement. That one had 3 medium risks and 1 high risk. There has been an addition to the audit plan to replace a previously agreed audit of risk management. As you would have heard earlier, risk management policies and guidance have now been developed and updates have been made to move risk registers to an updated scoring format. To allow time for these changes to embed, internal audit have therefore agreed to defer this planned audit and replace with an alternative engagement which looks at the achievement of the annual service delivery plans. This audit was on the long list for 2025-26, with the activities and performance targets outlined in the annual service delivery plans directly linking with delivering and embedding the TNBC corporate strategy. Appendix B, which is page 125 in your packs, shows the current audit plan status. 6 audits fully complete, 5 in fieldwork and 5 in planning, with auditors currently agreeing the scope and fieldwork dates with officers. There's only 2 audits that have not yet commenced. With regards to our external quality assessments, this is now well underway. Effectively, this is an audit of the auditors. The assessor is evaluating our internal audit team conformance against each of the 5 domains set out in the global internal audit standards. Stages 1 and 2 are now complete. The assessor has looked at how we operate, reviewing things like our charter, our strategy, information that we provide to audit committees, and has also reviewed the evidence that we have provided to support our self-assessment against the standards, considering as well things like how the audit function maintains independence and objectivity and how we demonstrate adherence to ethics principles. As the final stage, the assessor is now moving forward with reviewing specific audit engagement files to look at how well they demonstrate that we have followed our own processes and adhered to the standards. A sample of completed audit files has been selected for review, which includes some from TNBC and across our client base to ensure that we are consistent. The report is expected for this in March 2026, and both the report and any subsequent action plans that are developed from that will be presented at a future audit committee to you. In terms of resources, our Head of Internal Audit and Counter Fraud Service left at the beginning of September 25. We have been operating with an interim Head of Internal Audit and an interim Head of Counter Fraud who were recruited internally. These positions are expected to remain in place until a full recruitment exercise is undertaken to fill the post permanently. We are expecting this to commence within the next couple of months. We have had an additional principal auditor recruited into the service to help support delivery. They started in December, and the recruitment for a data analyst has also now concluded, with the position being filled internally and the officer commencing in their role from today. And we're anticipating that this analyst role will enhance our capabilities, particularly with delivering our data analytics and AI strategy. And one of the first things I've done is booked a meeting with them to discuss development of some reporting dashboards and things to help improve the information that we can supply to officers. We continue to review the functionality of our K10 audit management software, which we implemented last year. We had a system update to this last week, which included several of the proposals from our service to enhance our reporting capabilities. And we continue to explore the use of AI on a regular basis, looking at creating efficiencies. We're now regularly using AI to assist with planning audits, particularly clarifying and verifying expected controls, helping to design testing strategies and articulating risks. We're also starting to develop AI agents which can do specific tasks for us, but we do remain mindful of policies in place in both TNBC and KCC regarding the use of AI and protecting personal data. Finally, talking about implementation of management actions, this remains in line with the rates we were seeing at the same time last year. We had 28 issues which fell due for, where the actions fell due for implementation. 10 of those have been implemented or superseded, which results in 18 being outstanding, and 10 of those we've received evidence that they're in progress. The 8 that we've been able to establish any evidence towards completion, none of those are considered to be high risk issues. All the high risk issues due have been implemented now. That's all. I'm happy to take any questions. Thank you.
Thank you, Karen. Are there any questions at all? Mark, sorry, yes.
Thank you, Chairman. First of all, the appraisals process. As it seems to that we've only got half of the required process in place. It doesn't seem to push people into the direction of actually, oh, you've got to a certain point, then you can further your career by engaging in even more training or further engagement. Looking at that. There's medium assurance that can be. I think it sort of ties into the kind of the holding on to our officers, doesn't it? If the appraisal system works well, then actually there's continual development. They can reach their potential. Keep hold of them. The TM03, the asset management one. where we've got the red panel. Do we think that that's really unfortunate? That's been a little unfortunate because obviously the council's been in a bit of a state of flux where we've been spread across 2 buildings and we've transitioned over here. Eventually we're going to be, but maybe, and that has been a significant factor in that red panel.
Yep. Okay, Karen.
So I'll respond regarding the asset register management audit. So that high risk that has been brought out, the testing that we undertook on that was across a sample of assets on the asset register, and what the auditor actually found was that none of the assets had the correct location on them. And that didn't, unfortunately, I would have liked to have said that that was just due to the move between the Gibson buildings because of the work that's happening. But actually there were rooms on there that hadn't existed since pre-COVID when we were in the office, which was further compounded by we didn't identify any evidence either of checks being done on that asset register. There was no regular evidence that reconciliation was happening either, hence that being drawn out as a high risk issue.
We've got some, sorry Chairman, if I could come back, have we got some kind of indication of how many of these assets are missing?
So thankfully, what I am actually able to say was there's a lot of officer local knowledge. So actually everything was found, just not where we were expecting it to be necessarily. So we didn't identify anything that suggests that assets were missing, just that certainly there was a reliance on certain people knowing where things were.
James.
Thank you. Just one question on the appraisal process section. I note that things are being tracked using spreadsheets, etc. Is that because we don't have an HR system that's got dedicated functionality for handling this, or is it because we have the software but we're not using that piece of functionality in it?
Thank you. Yes. So that audit, we identified there's a new appraisal system being brought into use, but there were still some appraisals when we did our testing that had been completed using the old manual system forms. So it was there was a combination happening of some of the monitoring was happening via the new appraisal system, and some of the monitoring was happening via spreadsheets. We have had assurance that sort of by next year, when everything moves over to that new appraisal system, that actually the spreadsheets will be replaced by automated systems, and that will subsequently improve the communication and the reporting and the visibility of which appraisals have been completed and which are outstanding.
Fantastic, thanks.
Thank you. Any further questions? No, I think I see Kevin joined us online, so I think he might have a few words about the counter fraud Q2 progress report. Kevin.
Thank you, Chair, and hello members. Delivering the Q2 counter fraud report. So in relation to prevention and detection of fraud, bribery and corruption, this part of the report covers details of the council's activity in preventing these things during that second quarter of the financial year. So I'll start with the National Fraud Initiative. So the counter fraud team has collated the data specified by the Cabinet Office for 24-25. This includes reviewing the data to ensure it complies with the formats required and uploaded in the required timescales. The NFI is a biannual and annual data exercise in progressing with matches being reviewed by relevant teams. The annual exercise will be reviewed during Q3 as resources concentrate on completing the annual exercise. It's noted that the annual exercise do take time to investigate and complete due to their nature, and at time depending on the DWP payable benefits impacted on TNBC and their abilities to update accounts. The Kent Intelligence Network it continues to support local authorities in Kent in preventing and detecting fraud. And the key focus area for 25-26 continues to look at fraud and error within single person discounts, small business rate relief, and unrated businesses and residential premises. So during the quarter, single person discount reviews from fraud referrals increased the council tax liability by £13,000, bringing the total value of single person discounts removed during Q2 to just under 44,000. In the rolling year, the total single person discounts removed is now just under 65,000, with an increased total liability of just under 20,000. Unrated business cases, so 3 have been sent to the valuation office, with them closing 2 with no further action, and 1 open case awaiting their assessment. So the rolling figures for referrals to the valuation office are 7, with 4 being closed and 3 of no further action and 3 open awaiting their assessment. Unrated residential premises, so it's missing council tax in a total of 23 cases. 5 have been referred to the valuation office. 1 has been closed, no further action, and 17 awaiting their assessment. So that's just in this quarter. But the rolling total is 26, with 3 being closed, and 23 are currently awaiting valuation office assessment. The total number of debtors being traced this rolling year is 103, resulting in £232,000 of debt that can be actively pursued for further recovery action. So investigation of fraud, bribery and corruption. So there's been 26 new referrals that have been received by the counter fraud team in Q2, and the most frequent fraud type involves council tax reduction. And then DWP benefits such as housing, universal credit, which total 16. The second most reported fraud type is single person discount on council tax, where a total of 8 have been reported. In Q2, we've had 19 referrals that have been closed, and then there's a total of 48 cases from 26 that are currently open and live. And again, 18 of those are with housing benefits UC attached, and 13 with the single person discount, again leading the way in the work we do. In relation to legal implications, the council has a duty under Section 151 of the Local Government Act to ensure that there's appropriate system in place to prevent and detect fraud, and also to ensure that there's an irregularity log of all financial irregularities, which we obviously keep on behalf of TNBC. In relation to financial and value for money considerations, fraud prevention and detection is an area subject to central government focus with initiatives such as the National Fraud Initiative, which I've already mentioned, and the local government counter fraud and corruption initiatives. Risk assessment, so failing to have an efficient and effective counter fraud function could lead to an increased level of fraud, and obviously by having access to trained and competent fraud investigators, that mitigates that increased risk. And on a final note, the team got through to the final of the Public Sector Finance Awards 2005, and we received a highly commended result for the fraud prevention work that we do through fraud culture work with other clients. So that's to assess any fraud weaknesses within certain areas of our clients, and that's something that we could look to implement with TNBC officers. So that's the Q2 report, and I welcome any comments.
Thank you, Kevin. Are there any questions? Yep, Tim Bishop.
Thank you, Chair. Regarding the total of debtors, which is coming up at 232,000, that is what TNBC are owed. How much of that amount would we as a borough council keep? Because this could be council tax rate. It goes out to the other authorities. And when do we think the cost of trying to get what we could get not justified?
Okay, I don't know if you heard that, Kevin, but if you can ask answer the first bit and then Paul might come back to the second part.
So I'd have to find that out. I don't know the answer to how much TNBC would get of that 232,000.
Just to add to that, council tax, TNBC's share is about 14% on that. So every £1,000 we would get £140. The business rates, it's even more different because it has to go through the retention system and everything else, and we have to be above baseline. But if we're above, we normally get 40% of that. And then if we're above our baseline, depending on how far we're above in the new financial year, levies can be anything from, I think, 10% up to 100%, depending on how much we get back on that. So on that, on debts, we consider any debt write-offs. We always look at what's considered to be uneconomical to pursue is the correct word we normally use. That normally means that we have explored the use of tracing agencies, bailiffs, to try and find people. And it's normally at that stage we would then consider a write-off. The National Fraud Initiative does have the added advantage that they do use other means that are not always available to us, and they can have the tendency to find people that we may not be able to find. But if the case of that, if we find something that we've actually written off and we subsequently find that we've managed to find them, we can actually write the debt back on and say, thank you very much, we'll have the money from you. Trying to get it is another matter, but it's something, but we do consider any debt that we have through, it's normally either, for write-off purposes, either death, unable to trace, or uneconomical to pursue. We use every method we can. Okay.
Thanks, Paul. Yes, Tim, you want to come back?
A lot of this 230 odd thousand, a lot of it is going elsewhere. But are TNBC responsible for any legal fees to get any of it? Or can we get any? I mean, we've got to give some to Kent County Council, but do they share in legal costs?
Try and remember that carefully. I'll have a look into that and I'll come back to the members of the committee and find that out. I'll talk to Kevin and Karen and Lee after the meeting to try and get a clarification on that if I can. From there. Okay.
It'd be a bit unfair if we're paying the bills to get money to give to Kent.
Just to say, on council tax and business rates, if we take those two as an example, we add the cost of a summons or a court fee onto the cost of the bill. So for business rates, for council tax, it's £100. If somebody pays us £100, it goes against that debt first. We recover that debt first of all. Then it will go to start paying off any other arrears they've got. The level of debt we've got on that isn't huge, certainly not on business rates. I can't remember what it is on council tax. But similarly, any penalties from where Kevin said if they find somebody has misled council on a single person discount, we can issue a penalty and we get the money from that penalty because it's the same principle going. We add it onto their bill, they pay the money, and it's the first amount of money that goes off against that. So the legal fees on that, we do get a lot of it back.
Thank you. Mark Hood.
Thank you very much. Can I ask a question on page 118? In the middle row, taxi vehicle licensing and monitoring, DBS certificates for license renewal. This seems to have been going on for quite a while. It was first highlighted on the 30th of October 2023, and then the details tell us that the licensing team is actively looking for an outside provider to run the DBS checks applicants. They're not already registered on the online update service. Then it says the latest update on here is July 25. And it doesn't sound very encouraging. It says the provider we identified was HR Connect and was not progressed due to resource issues. I would have thought one thing that we're responsible for licensing, one of the main things would be making sure that the people who are driving our taxis have been properly checked out. So is there any update since then?
Through you, Chair. Karen's looking at me as if to say, you can handle this one, Paul. Thank you. I can assure you all taxi drivers, private hire, licensed operators are DBS checked. They must have a DBS, valid DBS, full stop. They are done. As you will probably be aware, Anthony Garnett, who was the long-serving manager, has recently retired, and the service has been handed over to Eleanor's team and Crispin. One of my objectives in my appraisal that I had with the Chief Executive recently was to get these outstanding audit recommendations cleared by the end of this financial year. And I am working with Eleanor at the moment to make sure that we've got this resolved, and hopefully in April we will have an update on this. I think it's been a case that with Anthony's departure and being slightly in limbo for a period of time, it has slightly fallen between the cracks, but we are working on it. And the idea is that either we will address the situation or we will accept any risk. But I can assure members, every driver has a DBS check. Without it, we won't issue the license.
Thank you. Any further questions? No. So I think it's just we note to the report. It noted. Thank you. Before we go on to item 10, I just want to revert back quickly to item 8 because I just realised that I didn't actually get a seconder when I made the recommendation. So I'll have to read that recommendation out again and perhaps invite someone to second it. And that was under accounting policies. The decision is delegated to the committee and members are invited to consider, subject to any required amendments, endorse the accounting policies to be used in the preparation of the 25-26 financial statements set out in Annex 1. I'll now propose that. Can I have a seconder? Yeah, James Clokey. Thank you. Right, on to item 10. That's the Grant Thornton Audit Progress Report and Sector Update. And I think that is Sophia. Thank you. Sophia.
Thank you, Chair. Thank you, Chair. Good evening, members. I have the progress report and sector update for you today. The progress element is relatively short because we are just gearing up to start the 25-26 audit at the beginning of March. So we're working with your finance team to get that off the ground. If I direct your attention to page 5 of the report itself, that's 143 of your papers. We set out there that overall, we want to stick to the same audit delivery timetable as we had for 24/5, which worked very well. We will be looking to shorten the time frame slightly, but we'll be working with your officers to implement that. The planning work that we start in March, we will be aiming to bring an audit plan to your committee meeting in April. We will also be soon starting the planning for the value for money work for 25-26. And the audit fees will be set out clearly in the audit plan that we present in April, but in the cover note to this report, you'll be able to see that the scale fee is just over 100 or just under 159,000 for 25-26. I'll draw your attention to the webinar that's being held for Audit Committee members on the 10th of February. Page 5 there outlines some of the topics that will be discussed, and also just letting you know that we've invited your officers, finance officers, to some of the local government accounts webinars or workshops that we hold annually. Over the page, we have the key deliverables for the 25-26 audit with the planned dates of delivery. And the rest of the paper picks up sector updates. Happy to take any questions that members may have.
Does anyone have any questions at all for Sophia? Yeah, Mark Hood.
Yes, thank you very much. Just going back to what we were saying about net zero, and there's on page 156, it talks about the business cases for net zero. It talks about funding, horizon scanning for new funding mechanisms and new partnerships. And it's kind of when we've got, it's difficult, isn't it? Because when you've got a government that's cut all the municipal decarbonisation funding, it's hard for us to transform our own operations the way that we would want to have facilities that over their entire lifespan would provide a much better outturn in terms of environmental and financial kind of resilience. And it talks about you working with other partnerships. So things like we're about to build a new leisure centre, hopefully, and maybe some of those new partnerships are people like Kent Community Leisure, who might be good partners. And if we're going to be looking at a development wider than that around that area, maybe looking at what can be done there. But it's kind of, it is this whole this page is kind of in denial of the wider picture out there, that actually the government is holding councils like ours back.
Thank you. So I noticed actually Scott saying it's interesting for Audit Committee is a proposed new duty of candour. Sophia, is there anything you want to add to that regarding Audit Committees? It looks quite interesting. Whereas extra responsibilities for us and suggestions.
No, it's sort of a heads up of things to think about. So things that you might want to be considering. I do believe it's something they might be picking up in the webinar too, so there can be further discussion for anybody that's thinking of attending our webinar.
Thank you, that's interesting, thank you. So no further questions. Thank you, Sophia. And can we note that report? Thank you. Item 11, there's no urgent items. So item 12, I'm going to propose that the press and public be excluded from the remainder of the meeting as the following items contain exempt information. Can I have a seconder for that, please? Yeah, James Locke, thank you. Okay,